Greetings, members, one and all of the Salivation Nation. Is silver ready to break out? Let's explore. That's right, silver has just reached barely above $17 an ounce. Platinum is up too, and so is palladium. Gold is only down marginally, but it looks like there is some movement, some positive movement, and a slight narrowing of the gold to silver ratio. Let's take a look at this article here from Kitco, and it's Todd Bubba Horwitz. It says that every day last week we wrote about the patterns in the metals. They went from ugly to strong. Those patterns are playing out this morning once again with gold, silver, and platinum breaking out to new recent highs. Therefore, you never argue with the price, which dictates everything. And of course, gold has pulled back considerably, but silver has kind of remained strong, but it is just barely. In fact, right now, as of the recording of this video, it's ticked back a little bit. Let's take a look. See exactly what's going on with the prices here, and we're looking at New York prices right now. And so that particular portion still shows silver above $17.08. So the other ticker either must be behind or this is ahead. But nonetheless, it says that silver is parabolic and looks headed to $18 in the July futures, possibly higher. Platinum is right there and trying to chase down $900 in the July futures. Gold's pattern is a little more rational, but is tracking $1,800 in the June futures. As you can see, the rallies have been powerful and backed with solid volume. But keep in mind, you look at these future prices, how they're separating from the spot price, and then you have the physical price, which is still, in a sense, separating to a large degree from the spot prices and future prices. And why is that? Because the supply chains are still reconnecting. And therefore, when there's high demand and low supply, well, the price you pay is going to be at a heavy premium, and you are not going to be seeing these deals that we've been used to for so many months. They're not out there right now. So higher premiums are probably going to be with us for a while, even though they've come down. We'll see what happens. Sooner or later, the spot price is going to catch up to those premiums. And even so, even with lower premiums, you may end up paying more for your silver and gold because of some of these if these futures prices hold out to what they say they will be. We would expect a small pullback across the board any day this week, but are looking to be buyers and add to our positions. Many would point to the news and say the move was because of the news, but we say the price action told us the news before it even came out. If you trade the news, you lose. Price action is the only thing that matters for trading and investing. And of course, those trade actions, I don't know if they're referring to technical analysis, what have you, checking the futures prices or what have you. I don't get into it at that level. I look at what the prices are doing, essentially what the spot price is. And by the way, that spot price might be different depending on which bullion dealer you look at, how they report the price. The bottom line is simple. Our algorithms are long, which is all we care about. When trading anything, emotions should not be part of the decision-making process unless you like being on the wrong side of the market. All trading decisions should be made on a mechanical basis with no regard to news or opinions. That's true, but it's very difficult because the market itself reacts on emotion. It's sentiment, it's psychology, and it can push and it can drive prices one way or the other. There's no question. That's why we see these interim ups and downs, which is which Todd Horwitz refers to here. And why is that? It's not logical. It's because of the news and opinions. It says we are now offering a comprehensive commodity report that complements our other services. So, obviously he's talking about a service here, but nonetheless, I do think that, technical analysis and, and the action and stuff like that, although it's a nice thought, I don't think it's realistic to think that you should base it solely on that. Now, as far as buying is concerned, personally, yes, You should not act on emotion. You should buy based off of what your budget will allow. That's why I'm a big fan of dollar cost averaging as opposed to waiting for the bottom and trying to sell right at the top, because no one knows what the bottom could be, and no one knows what the top will be either. You're going to miss out somewhere. You can say, okay, well, I got it, within $3 or $4 from the top, if you're talking about gold, or within 10 or 20 cents from the bottom to buy for silver. But, you're lucky if you get to that close or what have you. But regardless, it's one of those things where my feeling and my advice, and I'm not a financial advisor, but it's something that I've done, and that is to buy more when the price is less, when the price is low, and you buy less when the price is higher. So you buy more as your budget allows when the prices are lower, and you buy less when the prices are high. And then there's times, by the way, very important, if your budget doesn't allow, when you buy none when the prices are low, and then when you buy none when the prices are high. You don't always have to buy. Depending on what your budget allows, I do think as we do just accumulate, as you prepare for anything, it's good to have an amount of preparation. But you can but just understand that every ounce you get, every tenth of an ounce you get of one metal or the other, you are empowering yourself. You're becoming your own central bank, and that is something to be said. Now let's talk about the gold to silver ratio. The gold to silver ratio I'm referring to is based off the U.S. dollar and based off of spot price as reported here. It's gone down. And that's good. That means that silver is starting to, maybe break out. I'm cautiously optimistic. Can't say for sure that will happen. It's 102.06, but when we've been seeing 110 or 107, 112, this is getting back into the realms of somewhat normalcy, especially when we've seen it, as high as 120 before. We're still record highs here compared to what was before. But this is a very unique situation here, especially when we're seeing gold. I think in many ways, people feel that gold is in somewhat moves so quickly that some may even consider it overvalued. I don't know that I would go that far. I don't think gold's overvalued, but I do think that silver is still somewhat undervalued. And why? At least based off the spot price, because of this ratio. We've not been here before, so it would make sense for it to be undervalued. And not a whole lot has changed in how silver has been viewed since before this crisis and leading up to it here now. But nonetheless, it is a dual metal. But look at this day range. The day's range is anywhere between almost 101 to almost 105. So it has been kind of gone up and down there a bit here, but fascinating to see. So as we look at these markets here, the only metal that's down as of the recording of this video is gold, and it's only down just over to about 3/4 of a point here. And silver is up here right now. It is up over 2%. So that's a pretty good climb, $17 an ounce. And I think that tells us something here that looks to be in an upwards momentum. Let's take a look at the chart for silver and how it's been reacting here. It started out strong, and then it kind of went up to $17.40, and then it took a pretty big drop here and kind of is trying to find its leveling out here. Looks like it's seeing some resistance at $17 here. And so as the day has progressed on here, so exciting for silver folks out there. Kind of gives us a little bit of hope in the metal being seen as not just a commodity, but as a safe haven. Because I do believe silver is a safe haven. As wild as the price has been lately and as low as it's gotten lately, I do believe it's a safe haven in the long run. But it requires patience, and it requires averaging out your costs. And for that, it's going to be different for each person for what they pay. It's what you pay, what you can sell it for, the loss of premiums at the time of purchase, and the loss of whatever percentage below spot price at the time of selling, whatever that difference is. You got to take that into account. But nonetheless, you hold on to it for quite a while. That's why I believe that unless you are really good at flipping premium collector coins or better bullion, it's one of those metals where you hold on to it until you find a really good opportunity where you can sell it and come out, break out even when you adjust everything for inflation, or if you can sell it at a profit for some of these higher premium pieces. But nonetheless, it's interesting to see where things play out. Silver's not out yet. It is not. It is certainly in the game again here, making its way back up now above $17. We'll see how this plays out in the coming weeks, and as the reality of the economic situation settles in, and as the economy starts to grow. Post your thoughts below. Very fascinating news indeed. Like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.